Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about inflation, and there's a marked drop expected this week. We've got the inflation data coming out on Wednesday, and I want to talk about what this means for your mortgage rate, because inflation dropping is great. That's going to make your cost of goods when you go shopping that little bit more affordable, as long as you've had a pay rise that's above inflation, of course. But more importantly, if you're watching a channel like this, you really want to understand, will that finally bring my mortgage rate down to a more affordable cost? Because there are still millions of people on low interest rates that are just about to drop off, and they want to make sure that they can get a deal as close to they can to the original deal that they maybe have already. So we're going to talk about that and more in this video. If you haven't done already, do subscribe to the channel over there and hit the bell notification. And if you could smash like, tickle like, do something to the like button, that really helps with the YouTube algorithm. So obviously not in the office today, had to go up to Doncaster to get a property valued that we've been looking at. So that's all happened. Hopefully we get a good valuation in the next few days, all going well. So yeah, been up there, went up last night, been up there today, and now heading back down south. So I'm just charging the car. I thought I'd do the video here. So the inflation data is coming out this Wednesday, and it sounds like it's going to be really good. Really good, because I listen to all the Bank of England meetings. So they do, obviously, they release the data after their meetings, and they've been saying when they do their interest rate meetings for months that they expected inflation to significantly rise at the end of this year. Now, this data is suggesting, Barclays are saying they believe that inflation in the UK is going to drop to 1.7% on Wednesday. Other economists are saying 1.8%, and some are saying 1.9%. Either way, everybody is saying that inflation is going to drop below 2%, which is the target. That's good news. Now, what that means is that it gives that Bank of England next meeting that they've got in the beginning of November, gives them more wiggle room to drop rates. America had some good inflation data as well. That gives them a little bit more wiggle room as well to drop rates over there. But these are the base rates. And the bad news is that whatever happens, if the inflation data is good and the Bank of England drop rates in November and drop in December, it might not impact your mortgage as much as you are expecting. You see, the markets are really like in a state of limbo at the moment, and a lot of lenders are starting to put mortgage rates back up. I did a video on that last week on Wednesday, before a lot of people started talking about it on Thursday, and that isn't great. And so there's a lot of uncertainty at the moment, and it's all around Labour's budget. The markets just aren't sure what's going to happen. They don't want the government to borrow lots more money without a plan. And this is what happened with Liz Truss. Liz Truss did her mini budget. It went down very badly. The stock market then declined massively. Interest rates from lenders went up very fast to 6.5%, 7% is what you could borrow at. And that was when the Bank of England base rate was lower. It was lower than it is actually at this point. And so even though the Bank of England probably will cut rates again this year, you might not see it in your mortgage, and that is a problem. So what we all want to hope for is that the budget that happens at the end of this month is good. Considerations that people are going to look at is, how are the government, they've supposedly got this 22 billion black hole. Interestingly, which I talked about the other day, they want to spend 22 billion on a machine that sucks carbon out of the atmosphere. I've said, I'm not a scientist, clearly. Why can't we just plant more trees? Surely that would be a cheaper way to do that. But that's what they want to do. So that's what we're looking at. But the markets are saying, look, does Labour have a real efficient plan to pay for all these things that they want to do? Labour want to borrow 50 billion more. What's that going to mean for everybody else? How are they going to fund that? They've said repeatedly it's going to be a very painful budget. Lots of difficult decisions have been made, and that's why the markets are a little worried about this budget, because they've been seeding this for months now, that it's going to be very hard, lots of tough decisions. So we're expecting it to be a tax raid, basically. We're expecting inheritance tax to go up. Stamp duty will be going up anyway. That was going to happen. You've got capital gains tax is the one that could go up significantly from 20 odd percent to nearly 40%. And that could really stagnate the economy, according to a lot of economists. Because if you think about it, if you're an entrepreneur and you're looking to invest in something and make a business and potentially sell that business in the future, then maybe you'll be reluctant to do that. Maybe that works with the lower capital gains tax, but not with the higher capital gains tax, and that could put people off. And so because of that, the swap rate, which is the rate that the banks borrow at, that has been creeping up recently. Over the last week or so, it's creeping up. And that is why Santander, NatWest, Barclays, a lot of the big mortgage lenders are pulling deals and also increasing the cost of deals as well. So it doesn't make logical sense, does it? Inflation is below the 2%. The Bank of England are potentially going to drop interest rates, but your mortgage rate might go up. So I did make a video about this over the weekend. Should you refinance now? And potentially, I would look at that as an option. So if you have a mortgage that is coming to an end in the next 6 months, say for argument's sake, speak to a broker, see if you can get a deal agreed in principle now. Then if the budget is horrendous, which it could be, we don't know for sure, and then interest rates do start to skyrocket, you've at least agreed a better deal. But you've also covered yourself, because if rates drop, and let's say you haven't started that new deal that you've agreed in principle, so let's just say the other argument's sake was that John Charcoal, they were saying that they felt interest rates, mortgage rates, the rates that we borrow at, were going to drop to 3%. Well, if that's right, and that could be, you've got to have both sides of the story here, but that could also happen. Then you can actually, before you start the new deal, swap onto a better rate. So it's just smart to be prepared in this type of market. That's what I would really, really recommend, that you protect yourself and your family and give yourself that certainty by at least having a conversation with a broker about what your options are. That's all I wanted to say. And so, yeah, we'll look out. We'll be talking about the inflation data on Wednesday when it comes out. It would be brilliant if Barclays were right and it was 1.7, because that really does make at least the Bank of England's decision a lot easier to drop rates. And then maybe Labour have a change of heart and the budget isn't as bad at the end of the month. And then in that scenario, we could start seeing mortgage rates drop again. And that's what we want to see. Let me know your thoughts. Where do you think inflation is going to get to on Wednesday? Do you think it's going to drop below 2%? Do smash like, do subscribe, and check out all the other content on my channel, including this video right here.